Hello, fellow traders. This is Gabriel here with our Forex.Real.Trader channel, ready to start our second session with module 2, right? Once again, my disclaimer about the purpose of this channel is to provide information, education related to the Forex industry in order to help you better understand how this market works and somehow for you to get better results in your trading sessions. Today's module is very important because we're going to start talking about the essential technical analysis, right? So what we will cover today in this module has to do with the different resources and tools that we will find very useful in order to set up every single trade that from now on we're going to take in the market. So the first tool we're going to analyze is the Fibonacci, right? So what is the Fibonacci tool? So basically the Fibonacci, and in this case, the retracement is this. The retracement levels in the Fibonacci are horizontal lines that indicate potential support and resistance levels based on key Fibonacci ratios. The key Fibonacci ratios that we're going to focus on are 38.2%, 50%, 61.8%. Okay. What is the application? I mean, the application is pretty simple. Okay, we're going to use this one to identify levels for potential reversal points in a trend. It doesn't matter if we are talking about a bullish trend or a bearish trend, the Fibonacci retracements work pretty well. So let me show you on our MetaTrader 5. Okay. For example, we have this chart in here, all set. And the very first thing is to identify, where do I find my Fibonacci retracement? So on your platform, you'll see these lines in here, right? So this banner contains something called study lines, right? And the study line that we're going to use is this one, right? This is our Fibonacci. Another location where you can find this one is here. So look at this. Here is our Fibonacci. And also when you access here to the tab of objects, insert, so you can see here all the different variations. The thing here is that there are many variations for Fibonacci. The ones that I use and most traders use is the Fibonacci retracements, right? Which is the one to detect the support and the resistance and the meaningful levels. Say, for instance, we're going to take a peek on this chart here, for example, okay? So it is a clear downtrend, okay? So how do I know? All right, because there are some signals in here, not only that the trend is coming down, okay? And that is something we're going to learn as well. But somehow we can see clearly that the trend is bearish, right? So it's a real, okay, bearish trend. What happens? We're going to draw, okay, here a Fibonacci in order to determine certain levels, right? Certain levels of, in this case, resistance, right? Just to see if this point in here is a Fibonacci resistance moment, okay? So how do you take the Fibonacci? By clicking here on this icon on your tab, the one that reads draw Fibonacci retracement. So basically, let me expand a little bit for you to Have a better look at this. Okay. So you click on the tool and immediately the icon, the cursor changes. So you come here to the higher high, the previous higher high. So you click, sustain the click, and drag it down. It means that when we are, well, our intention is to identify the Fibonacci levels on a downtrend. So I have to trace, right? I have to draw it like that, from up to down, like this. All right. So you see here these numbers, right? You can observe these numbers in here. 61.8%, 50%, 38.2%. 61.8% is a Fibonacci level. 38.2% is a Fibonacci level as well. However, the 50 is not really a Fibonacci, but it's interesting how most traders find on that very level support or resistance, depending on the case. So what can we observe in here? We can see that this moment of this pair, American dollar, Japanese yen, somehow, yes, there was resistance on the 61.8 level. How do I know it? Simple. If I trace here my started line, my horizontal started line, you can say, okay, but what about the shadow of the candle that is above the level? That is a good thing. In trading, anything is perfect. That is the reason because most traders catalog trading as art. So it's the art of observation, the art of analyzing, and anything is exact. What is this in here? This is something that we call this is the buffer zone, right? This is a buffer zone in here, right? Simply because, okay, it was within the range of the 61.8 level, but it held in here, right? So in this case, we can identify that is a clear resistance. And the resistance was on the 61.8 Fibonacci percent level, right? So here is our clear resistance. So this is a good flag for us to determine, all right, might be interesting to enter, but not right away. Okay, here I'm not talking about entering or exiting or setting up the trade. No, we're talking about the tool. And one of the tools that we work is this one. So now we have a clear indication that one probable step for taking a trade is that there is a clear resistance on the Fibonacci level, 61.8%, right? This in the case of a downtrend. What happens or how we trace it on an uptrend, okay? So let's find here other pairs. Let's see what's bullish in this moment. Okay, for example, this one is a good example, but let's see, I think all of them are going to be pretty similar. Okay, for example here, you want to know, okay, if this level here is a Fibonacci level, right? So that's what we want to know, right? If this is a Fibonacci. So I analyze, so I trace my Fibo from here to here. So this is my point A to my point B. All right, so let's trace it. Click here on my tool, or if you want, you may click on Insert, come to objects, click on Fibonacci retracement. The same thing. You click, because we are checking an uptrend, right? Because it's an uptrend. What we're going to do is to trace the Fibonacci from point A to point B. So it's like this. So from here to here, right? And let's observe if this is a Fibonacci level. So trace our line here. Okay. Yes. Very similar to the previous case, but now in an uptrend. And again, here is a buffer zone. It's not exactly, it doesn't mean that the price is going to come to the 61% and then immediately go back to the current position of the trend. No. Here the thing is that sometimes price tests. In this case, this is the support, right? This is support. This line here, where the price holds, right, on this 61.8 Fibonacci is called support. So it means that the price is not willing to pierce and go down. No, pierces a little bit, but then takes back to the original position, right? So this is the way how we're going to use the Fibonacci levels. Let's do another example. Okay, let's find here with other. For instance, okay, this is the same that we did a while ago. Let's check this one. For instance, okay, this could be an interesting one. Look at this. So let's analyze New Zealand dollar, Swiss franc. So what is the objective here? To determine if this area here is a Fibonacci support. So again, click on my tool and I'm going to draw it from bottom to top, right? And yes, I can see that exactly. Look at this, 50% Fibonacci level. So this is a good, right? A good signal in the moment. It was a good signal for the trader to enter, right? But of course, also taking into account other factors. We never place a trade based only on one indication, only on one signal. No, we have to compile to analyze different signals the market is giving me in order to give me the go green, right? So this is it. If you have any comments, suggestions, please don't hesitate. Leave your comments in English, Spanish, Portuguese, any questions that you have about what we are working on the modules, that I will be very glad to answer the questions. Remember, subscribe, right? Remember, share, help me help all the traders to get better in this industry. So this is it. So this is all about the Fibonacci tool in this moment. It's just the introduction about the tool, okay? So now we have something called EMA, right? So what is the EMA? These are some lines that we can set up, right? That we can set up on our trading platforms. It doesn't matter what trading platform I'm using, okay? So the thing with the EMAs is that we can analyze somehow the trends, okay? We can detect if there is currently a trend. There are two types of EMAs. We have SMA, which is simple moving average, and this basically calculates the average price over a certain number of periods. right? And that gives us some very approximate data, okay, about the current momentum of the price. The EMAs are exponential moving averages, and they give more weight to the most recent data, okay? It's more responsive to recent price changes, but we can combine both, the EMA and the SMA. Let me explain how it works. I'm going to set here a blank template. For example, here, let me see a blank template like this. This is a blank template. This is the default template that you will have with MetaTrader 5. So I'm going to start setting it up, right? So let's change it to, say, for instance, one of my templates, say this one here, scalping. I already have my indicators, okay? I already have my tools in here. So just like this. What am I going to do? I'm going to, in the 1 hour chart, I'm going to set my exponential moving average. I like to work a lot with 200, with 144, with 50, right? So how we do it? So you enter here in insert indicators, and you start looking for them. So for instance, if you access to the trend, so look at the root, insert indicators trend, and on trend you find moving average, right? So that's it. So now there's a pop-up window here, okay? So you can set it up. For instance, periods. The higher the number of periods means that the EMA is covering more data, right? So let's say, for example, 200 periods, and let's hit it in blue, right? So let's see how it is going to be shown on the screen. Look at this, okay? So this is my first EMA. Now let's set another EMA. Insert indicators, trend, moving average. This is exponential. Let's say, for example, is 144, okay? Change the color to the color you want, that you feel more comfortable with, and set. All right, that's it. So 200, 144. Let's set the final indicator, the final EMA. Say, for instance, is gonna be 50 periods. And the color, say, is this green. All right, that's it, okay? So I can observe in here, okay, 3 different exponential moving averages in the same chart. What is the purpose of doing this? Basically, the EMAs and the SMAs as well, right? These ones in here, all of them are EMA, or exponential moving average. This one is 200. This is EMA 200. This one is EMA 144. And this one is EMA 50. Okay? Depending on the strategy that we are working on, okay, the focus of our strategy, each of these exponential moving averages will serve a different function, but all of them have a common denominator, and that is to show me if there is, in this very particular case, if there is support. Okay, we just saw support with Fibonacci. Now we see support with EMA. We also saw resistance with Fibonacci. We will see resistance here with EMA. But here we have to clarify the concept of what is support and what is resistance. Basically, support in this case, as you can observe, is when the price touches first a little bit and goes back to the original direction. So it means that here the price found support. So was not able to break through. Okay. For instance, here in this case, look at this in this case. Price was here and then came back, okay, broke it, and broke it. So the support was broken. All of them were broken, but then it came back to the original direction, right? So every time the price hits this area is called support, right? If there is, say, for example, an EMA, okay? Let's do this. If I delete, okay, you can delete everything. You can set up everything you want on your platform. So let's say that I'm going to delete all of those ones. For example, let's suppose that I have this EMA, right? And the behavior is this, right? This is my, say this is an EMA 200, for example. What happens? Every time the price hit here, and here, there was clear what? There was clear support. Why? Because it found the exponential moving, touched it, tested, and then went back, right? So continue with the movement, up, down, up, and continues, right? The same in here, up, but here broke it very well, came back in here, but the clear resistance, the clear support was here, and here. So that is the function of the exponential moving averages. Well, one of the functions, right? To show me, or how I use it, to show me where I can find clear support when the price is moving, right? What happens now with a currency pair that is trending, but in a bear? It's a bear trend. Let's see here. Look at this, for example. Okay. So let's move backwards. Okay, look at this. Look at this beautiful here. Okay. I have these three EMs, right? So this is my 200, this is my 144, and this is my 50, right? All of them are EMA, right? EMA. Okay. So what can you observe in here? That basically here is writing the price. That is called writing, right? So the price is writing this EMA. So it's finding all the time. In this case, is not support. In this case, is finding resistance. So it means that the price is coming down, is in a downtrend. Here is my EMA, right? My exponential moving average. And the price comes here, touches, tests, but goes back down again. And the EMA follows, right? So that is an interesting observation as well. Okay. Again, how you set your EMAs. So let me delete this, and here. Okay. So how do you set them up? Basically, again, here in your tab, access to insert, indicators, trend, and you choose moving average. And here you choose the periods, okay? The lower the period is gonna get more noise in the movement. The higher the period, of course, it is going to be more reliable in the sense of longer periods of time, right? And also you can change from exponential to simple, right? And you change the color in here. You can change different different tools in here and click OK, right? That's it. You got your EMA, right? Or your SMA. How you delete it? Or hover the mouse, the cursor over the indicator and delete indicator, right? So that is the way. Trends and ranges, okay? What are the trends and the ranges? Basically, the market has two movements, right? Two clear movements in which we mostly operate. One of them is when the market comes down, right? Here, let's see. For example, here. Expand a little bit, Right. Look at this. For instance, in this very moment, just by observing a little detail of here are higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, higher lows. And here it's a lower high, lower, lower low, lower low, lower low, lower low. All right. It means that the trend is clearly a downtrend, right? That's it. That is the very first thing that I identify, a downtrend. What is the other scenario? The other scenario is when the trend is going up, right? For example, here we can observe a series of what? This is a higher high, higher high. This is a lower high, lower high, right? So here in this moment, the trend is what? Is going up. So it's an A up trend. Okay, simple in theory. Okay. Now, what is the other scenario? The other scenario is when you observe the chart and it is not clear for you to determine the direction, right? So this is the example here. So you observe that, okay, higher, okay, higher high, but oh my God, this is lower, this is higher, here. So it's erratic. So that erratic behavior is called a range movement, right? So the market is ranging now. Is possible to trade under those conditions? Yes, of course. But the advice here is to go with the flow, right? Trade with the trend. If the trend is going bullish, if the trend is going up, all right. So the ideal thing is to trade with the trend. Or if the trend is coming down, as clearly you can see here, right? Look at this. So this is another clear downtrend here. Lower lows, lower lows, lower highs, lower highs, lower highs, lower lows, right here. All this one, okay, you trade here because this is a lower trend, right? Or what we call here a bear, okay, or a downtrend, okay? So this is where we trade. In the ranging, okay, is a possibility, but you have to approach with different tools and your strategy is completely different from trading uptrend or downtrend. So in brief, we have three types of trends in here. We have bullish, we have bearish, okay, and we have sideways, right? Sideways or ranging, okay? So we call this bullish trend. We call this bearish trend, or we call it sideways or range, right? Range trend, okay? So that is the way how we're going to identify them. We can use different tools, of course, but basically, when you pay attention to something that I have done here, which is the higher, low, higher, low, higher, low. It means that the pricing in every movement is coming down, down, down. And the same happens with a lower price. So this is lower low, this is lower low, this is lower low, this is higher low, right? So this is somehow the way we can identify in brief, right, if the trend is coming down. I repeat, this is just the introduction to the tools, because later on, when we start working with the clear trends and the strategies, we're going to go into depth in order to know how to set up everything and compile every aspect in our operation. Okay, so now we have support and resistance. Okay, I used a few minutes ago EMAS, right, exponential moving average, right, to detect support and resistance. Also use the Fibonacci retracement levels to detect those patterns of support and resistance. But if we don't use them, we can use horizontal lines, right? So if I place here, for example, this horizontal line, I can identify clearly that on this very price here, okay, is a clear what? Here is a clear resistance of the price, right here and here, right? How? Because the horizontal line shows me that the price hits here and cannot go up, so keeps coming down, okay? So that is a resistance. Here we can find now support, right? Why is that? Basically, because when the price touches this area here, okay, it cannot come back down, right? So it doesn't come in here, no. It finds resistance right here on this area, which is the support, and immediately returns to the original direction, okay? So that is what is support. In this very chart, here is clear another, look at this, okay, here, look, oof, this is a good one. Here you can find a very, very strong, remember, here, when the price comes down and touches this line, this is called what? This is called support. But when the price wants to go up, right, up the ceiling of the movement, right, and can go back, can continue there, that is a resistance level. So you can see here very clearly as well that the price finds resistance here, 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 right? So it's a very strong resistance area, okay? So because the price comes back here and then back in testing, back in here, testing, comes back testing, right? So what is the trend in this very moment is ranging, right? Because it's neither uptrend nor downtrend, is sideways. And most of the time you can find these patterns when we observe ranging movements, okay? All right, something related to the indicators, okay, related to lagging, leading, ATR, ADX, MACD, crossover, 2 lines, stochastics, and force index will be part of our next session for technical analysis. So my fellow traders, thank you very much. Once again, my invitation is to subscribe to the channel, to share the contents, to help me support all the traders in this wonderful industry of trading Forex. So thank you very much and see you in the next video.